Hi there. So I will just quickly walk you through the model, like how this has been built and how you can use it for your planning. So like as you can see, this is the first sheet, how to use this model. You can properly read through every line items. I have properly explained how this model is working and how everything flows. Anyways, I am going to explain this in this video. So we have like the first sheet is navigation. Like you can use like you can go to dashboard, assumptions, profit and loss, and like this. And all blue input cells are input, blue font cells are input. If you just want to tweak anything in this model, you just need to change the blue font cells. That's it. And black are the, of course, calculated one. Next is the dashboard, just to give you the quick bird's eye view of the entire model in one go. Based on your assumptions and all, this is how the model is looking right now. Like year one, this is our revenue, cost, margin. Also, we have our cash balance and so on. Also, we have the cost breakdown. Everything is properly linked. This model is very dynamic in nature. Okay. So as you can see, you have payback period as well. Like right now, whatever initial investment you are making, you will recover it in 1.2 years. Of course, you need to like define how much you want to invest, how much is the actual investment required. Right now, based on the industry benchmark, we have factored that in the model. So now coming to the main sheets, as you can see, this is the input sheet. Like first is the project cost. This is basically nothing but roll up from this one. Like what are the initial investment required for the food truck business that we have mentioned. Again, you can only change this blue font cells. Okay, right now I have kept the 20% of debt. Like if I make it zero, the all will be equity itself. Like if I add debt, the proportionate interest cost and all will be added to the income statement. You can again tweak the interest rate, loan tenure, and so on. Everything is dynamic. This is basically nothing but working capital requirement. By working capital, I mean like, for example, you need to hold some inventory for days. There might be some receivables like card settlement, like customer might pay you via card, but the settlement takes 24 hours, 1 day, 2 day, whatever the case may be. Again, you can change this. Based on this, you will need to have some amount of working capital to sustain your business. So that's why we have kept this section. If you want, you can just leave it intact. Right now, this has been set based on the industry benchmark. Similarly, we have the general assumptions like annual inflation rate. This will impact your year on year fixed cost. Like in USA, as per our latest research, the inflation ranges between 3 to 4%. So that's why we have kept this. Again, you can change it. You can change this to zero or whatever you want. Like tax rate. If tax is not applicable to you, you can keep it 0%. We have depreciation, we have the discount rate. Again, only blue figures can be changed. Next is very important revenue model assumptions. Like for now, we have kept the max customers per day 120. This is basically your total capacity right now. If you increase this capacity, you might need to increase your number of employees and all, which I will show you at the later part. Like average ticket size is nothing but average order value. Like operating days in a month, you can of course increase or decrease this. Revenue growth rate is also there. So this 6% will basically impact your ticket size. So like 20 will be increased by 6% in year two, then 6% to the power two in year three, so on. And this is your ramp up schedule for year one based on your capacity. So based on your capacity, you can serve 120 customers per day. But this is the maximum capacity. So in month one, 35%, 50, 75, and so on. Like this, you can decide as per your truck size, as per the number of employees you decide to keep. That's how you can do this. And next is the seasonality schedule, seasonality factor. Like in which month you will expect more walk-ins, which month it will be lower. In some month you might do overtime, and this will impact your seasonality. That's how this has been made. Now coming to your cost, like standard cost of goods sold is basically 30%, packaging and so on. And these are some miscellaneous expense. Again, you can increase your staff count. If you are increasing your staff count from two to suppose four, so accordingly you can increase your capacity as well. So that's how you can tweak this model. This is very dynamic. And again, if you need any customization, you can always drop a message. Now, to quickly wrap this up, this is nothing but P&L, your income statement. Everything is linked to this assumption sheet. Next is your cash flow, like how much cash you need to incur, outflow or inflow, whatever the cash may be. This is balance sheet to give you the rough idea of at end of every year how much will be your cash balance, how much will be your assets, how much will be your loan balance, and also we have added this check. Like if anything goes wrong in the model, then this won't be zero. If this is coming to zero, that means the model is perfectly aligned, everything is properly linked. Now this is like very important sheet for you break even and returns. Like for example, based on your average selling price that you set there, based on the variable cost and all. So for example, your break even customers per month is 1287. So of course, if you want to reduce your break even, you need to increase your margins, increase your average order value, decrease your cost. So right now, unless you serve 1287 customers based on these numbers, you won't be profitable per month. So similarly, we have the break-even revenue per month, break-even days per month. Like for to serve 1287 customers, you will need approximately 10 to 11 days. So that's how this model has been built. Very logical. Similarly, you made the initial investment from that assumption sheet. So how much is the recovery timeline right now based on the current numbers? It's coming to 1.2 years. So this is nothing IRR and NPV. You can leave this intact for now. So that's it. If you have any query, you can always drop a message. We are open to customization. Thank you so much.